Hi everyone, this is Pete here. So yesterday we had a really great session on FOMC discussion with Ethan from Unbeatable Mortgage. Now, for those of you who did not attend this live, right, you want to watch this replay. So we talk about how will the FOMC decision be changing the next few years. So if you're looking at repricing or refinancing your loan, this is something that you need to be aware of. And we also talk about how it will affect the stock market. And I also give you guys my prediction on what's going to happen to the stock market and property prices going forward. Okay, so if you're interested in all this, you want to watch this video. Let's get straight into it. Good evening, everybody. If y'all can hear me loud and clear, all right, can you type yes in the chat? I just want to make sure that y'all can hear me loud and clear. Huh? All right, fantastic. Hey, I see some of you were from my yesterday live stream, and today you are here with me again. Right, fantastic. Okay, really very grateful to a lot of my followers, including many of you who always come on my live stream. Right, so I want to continue to add value to you guys as much as possible. And why I suddenly called for to do this live stream is because yesterday we actually had the not yesterday, actually it was this early morning. I think it was 2 a.m. around there, Singapore time, where we had the FOMC announcement. Okay, that is super, super important. Okay, and of course, usually when we talk about FOMC interest rate, right, I won't do it just by myself, right? I will bring in the expert, and the expert is none other than Ethan. Okay. Hey, Ethan, can you say hi?
Hi everybody, how are you guys doing? Thank
Wow.
you for joining us today.
The important thing is this round, there was very interesting FOMC stuff. Okay, so maybe later I'll get Ethan to share his take on the FOMC announcement. But let me just go through very quickly what I see from my perspective as a stock market investor, as a portfolio manager, and also a property investor myself. Okay, then later I'll get Ethan to talk about also the real estate scene. But more importantly, is his niche, which is mortgage rates. For many of you here, you are looking at mortgage rate, should you change it or not, right? Then you want to pay attention. Okay, guys, just to warm up, can I just check how many of you here, right? Perhaps you are in the midst of either renewing, repricing your loan, or you're getting a new property loan. Can you type in one in the chat? I just want to see how many of you belong to this group. Okay. All right. Let's see. Hey, nobody really everybody cannot not repricing your loan. Hey, actually you all should later on Ethan will share with you all why. Okay, all right, let me go to my screen. Okay, all right, okay, so everybody, do you all know this round did we see the Federal Reserve interest rate change or not? Yes or no? Did we see the Federal Reserve interest rate change? Yes or no? No, don't have. This round we didn't see any changes, but there are still important things, right? So this one, I just want to share with you all very quickly. This is one thing that Ethan and I always look at, which is the dot plot. Okay, wait. Okay, now, where is my mouse? Okay,
This
yeah. And what is dot plot? Dot plot is basically looking at all the Federal Reserve governors, how they feel the interest rate will go in the subsequent months or years to come. Okay, and you can see here, actually, this is provided by Yahoo Finance, very useful. The light blue one, right, is the December 2023. The dark blue is the March 2024, which is this round. So this is last quarter, this is this quarter. And you can see over here for 2024, there's a lot more consensus right now that it will be around this region, which is around 4.5 to 4.75, roughly there. Okay. So what this one is being interpreted by a lot of people right now, right, is that we are likely going to see a cut of interest rate, right, around 3 times. That means 75 basis point. Okay, 75 basis point. And more importantly, look at 2025, the general consensus that it will drop even further to around 3.75. And by 2026, they are looking at maybe 3, roughly there. Then beyond that, they're looking at really bringing it back down to, I would say, almost all-time low rate. Not all-time low, like back to almost historical low. Right?
normal,
Okay. Normalize. Normalize. Okay.
normalized,
2.5.
healthy.
Right. And this is basically the projection. Now we are at around here. They are looking at going back down all
Correct.
the way to 2.6.
Okay, so remember all these numbers in mind, it will come in later on. Now, this round, Jerome Powell gave quite a lot of hints. For example, one of the reporter asked, I don't know whether Ethan you saw it. The
Mm-hmm.
reporter asked him, Mr. Powell, do you see the inflation rates? Is it going to stop the rate cuts? And usually you will hear like maybe very standard answer and stuff like that. But guys, do you know what Jerome Powell said? Jerome Powell actually said that the recent rise in inflation is not going to stop them from changing rates. He even said that, temporary up in inflation is expected. We will likely continue with our plan to cut rates. So I was shocked, I was really shocked because all the while they have been talking about, if the numbers of inflation is too high, they might not cut. But now the mood has changed. They are trying to cut quite badly. Okay? Right? Okay, so firstly, there are a few more FOMC for the rest of the year. Right? So there's April, June, July, whatever. Okay. So bear in mind, there's going to be 3 cuts. Now, right now, inflation, is it high or low? Everybody, type in the chat. What do you think about your inflation? Okay. What do you think? Inflation high or low for you? For me, I think it's still pretty high, right? Core CPE is still about 2.6%, right? Yeah. So just say it's high, right? So in fact, when you look at GDP forecast, so at the same time, they say, hey, GDP forecast 1.4 to 2.1%. Right, in 2024. That means we're going to see economic growth. And actually, Jerome Powell wanted economic to come down, okay? Right? Kenneth DM me, he asked, could it be due to the coming election? Could be, could be. Later, I'll talk about the election. Okay, but guys, if you all can, write directly to the whole chat group so everyone can see. Okay, thanks, Kenneth. And another thing is this. Just now I talked about core PCE. Core PCE inflation did go up a little bit from 2.4 to 2.6. So that's like a 0.2% increase. Not a lot, but it's still higher than what they would want it to be, right? The inflation number they want is what? 2. They want to bring it to 2, right? But from the tone of Jerome Powell is what? Basically, he's saying, I think I'll still cut. They are really trying to find reasons to cut, Okay, so in light of this, when do I think the real cut will start? Now, bear in mind that we have 3 more cuts to go. If they keep true to their words, I think they will start cutting by June. Okay? Why? Because imagine if you only start cutting by July, you only have a few more FOMC to go. So what does that mean? That means is if you only start in July or September, you have to cut 3 in a row. And to me, that is dangerous. Because I don't think the Federal Reserve wants to put themselves in such a position whereby they have no choice really. They just have to cut all the way. Okay. And that is potentially quite scary one. All right. So this is my quick take on this round, the FOMC announcement. So my take is that Jerome Powell, they all really want to cut. Even though the inflation number is telling them, hey, the pen is still very hot. But they say, never mind, we'll still cut. Right. So what are the ramifications? Later we can discuss about that further with Ethan as well. Okay. All right. Hey, so Ethan, that's my take. How about you? What was your main takeaway from this?
Actually, on this, right, I see that the core PCE numbers. Let me share my screen. Give me a moment. Share screen. Oh, you
Yeah.
gotta allow me.
Yeah, wait. Let me allow you to share screen.
So there are two that they are looking at which is PCE and PCE excluding food and energy.
Yeah. Okay, you can share already.
Can share already. Share screen. Let me go over to one.
Hey guys, by the way, if you all have any questions about the Federal Reserve interest rate stuff, put it in the chat. Then I can go to Q&A later.
Are you guys able to see this?
Yes. The
This
BEA, yes. Yeah.
this is the latest one that came out in February 24. And it says that the PCE, this is big enough for you guys. Are you able to?
Yep.
Excellent. Okay, so the price indexes for PCE actually moving down towards 2.4.
The one that I saw, or maybe the one is called PCE, I don't know. But maybe it's slightly different. I don't know.
Right. So I think this is the one that they are looking for because they actually mentioned number 2.4 while they are in.
Okay. Good. So actually it's on track, right? It's kind of on track from what we can see.
Kind of on track. However, right, one thing that they are definitely trying to avoid, right, is a stagflationary market where inflation still say prevalent, but then unemployment is high and then interest rate is high. Then that is when they need to actually, then that is when inflation becomes entrenched within the market. And when the inflation becomes entrenched within the market, right,
Yeah.
a lot of nasty things can happen. You know what Paul Volcker did, right? They had to do double rate hikes to be able
Yeah.
to on the amount. So
Yeah.
it's,
Yeah.
it's quite
Yeah.
serious. Yeah, and later I can share. Give me a moment. Let me share a different screen.
Yeah. So Ethan, maybe on top of the Federal Reserve, the rates, right? How do you think this will affect our Singapore mortgage rates on that front?
Excellent. I will cover everything.
Okay. So that part I'm not very certain. Because the strange thing is this, we saw that Federal Reserve haven't cut rates, but actually Singapore, right, from what I can see, hey guys, how many of y'all once again, y'all are looking at reviewing your mortgage loans, right? Can you type in me in the chat? Is that Singapore side has already started to change rates, so
Mm,
yeah, starting to drop quite a bit already, right?
correct.
So Corinne is looking at renewing or changing her loans already, right? Neo as well, yeah, right? Okay, so I don't talk so much. Let you talk. You're the expert here. Come.
All right. So you are able to see my screen, yes? Okay, so let's talk about the key takeaways. Number one, they are looking to hold rates at 5.33%. Number two, they will lower rates before the end of the year. How much they are going to lower at this point of time, they say 3, but it depends on the incoming economic data. Later, I will go a little bit more deep into this. What they actually did, right, was to slow down the rate of the increase, the rate of the decrease, my apologies, so that they will be able to slow down and monitor and see what happens in the market. And one thing that they actually talked about was the unemployment rate. They say if the unemployment spike, that might increase their policy reaction. So this is one of
Actually,
the
unemployment did, right? It did go up to about
a little
4%,
bit,
right? Yeah.
a little bit.
Yeah.
It went up, but it's still within the FOMC numbers. They're
Mm.
expecting 4%. So they're expecting the environment to be a little bit rough, but like what I said, like what Jerome said, they have dual mandate. One is inflation low, second one is unemployment low.
Yep.
So
Okay.
this is what they have. So I'm going to go through everything for everybody so that you'll be able to get an overall picture. Feel free to screenshot this, but more importantly, is a public domain kind of situation. Therefore, this is not financial advice.
As usual with Ethan, the disclaimer is very important because later on, right, we'll talk a lot of
Important, more
off the
more
cuff,
fun stuff.
stuff. Okay, off the cuff
Yeah.
stuff. All right. So do keep it to this session. Well, actually, I'm recording for one. Maybe I shouldn't record.
No. It's okay. But
Okay.
disclaimer then okay already.
Yeah. And guys, at the end, after Ethan go through everything about mortgage already, I will also chime in to talk about the stock market and share about the S&P 500 and Nasdaq stuff. So tonight is going to be a very complete session, right? Your portfolio, I can guarantee 99% of you sitting here, if I take your property and your stock portfolio add together, right, it should be also 99% of your net worth. Okay, so very important. I hope that tonight's value add to you will be very good. Okay, so Ethan, 你先来，让你先。
好，谢谢你。Okay, so let's talk a little bit about mortgage. So home loans, you can borrow up to 75%, and you're able to choose fixed rates or floating rate. Later, very important. Later, we will talk about the numbers. I'll talk a little bit about whether we should go for fixed rate or the floating rate a little bit. But once again, everybody's case is different. Everybody's loan is unique. Everybody different loan tenure, etc. So when you pay for your mortgage, right, you don't just pay everything into interest. You pay for interest and principal, and over time, you can see that the principal will go down to eventually zero, and then you own your property, and tada, you become millionaire. So this mortgage is one of the most boring way to become a millionaire, and I love it because
Like for
this
savings, yeah.
yeah, it is like for savings plus investment plus leverage plus hedging away your inflation because you can actually borrow because you are actually borrowing at very, very cheap rates. It's one of the only loans that allow CPF payments. Therefore, the default rate is very low, the duration very long. That's why the
Yeah.
rates are very cheap. So we specialize in bank mortgages in Singapore. We are certified by Singapore Estates Agent association. We have a 4.9 star and 400 plus happy clients, and hopefully a little bit more after this lah. All right, we are partnered with all the major banks in Singapore, so we are like your contact person. You reach out to us, we'll be able to get you to the one that give you the best rate, the unbeatable rate. All right, so the typical loan structure, just now, Pete, you were talking a little bit about it. You said why we should actually do the refinance or repricing, right? It's because, right, you see, year 1 and year 2, they actually give you quite decent rates.
Yep.
However, the year 3, this is where everybody kena hantam. This this is where, right, you see the 3-month SORA plus 1%, and you see 3-month SORA plus 1% over here. And even at the floating rates, right, you can see this rates is plus 0.5 only. So after you're locked in, typically your banks will increase your interest rate because they need to be able to give you new and updated rates lah. Okay. So I give you guys a cheat code. Everybody that has a building under construction property, you can screenshot this picture. They tell you the timeline of how everything is. When you buy, why you should do the repricing, why you should do the refinancing and reprice again and then exit. We'll talk a little bit more, and this is for the resale. Okay, just for you guys to understand the concept on paying lowest interest rate every single step of the way. So when is the exit? A lot of people like to ask me, because why would you want to sell away your home, right? This is my favorite chart where this actually coincides with the Bala table. The Bala table has been proven to be a little bit inaccurate. However, I want you guys to follow me in terms of the theory. So when you're left with 60 years, the maximum the bank can lend you is 30 years only. When your property left with 50 years, your maximum is 20 years. When your property is left with 40 years, your maximum is 10 years. Pete, can I ask you, from a 10-year loan versus a 30-year loan, which one got higher quantum?
Quantum?
Yes, because you'll be paying over a longer period of time.
As in, you're talking about which one I will pay more over a longer period. Should be 30 years, right?
Correct. 30 years, right? You will have a longer loan. That's why you'll be able to buy more.
Yeah,
If
correct,
you have
correct.
a 10-year to pay back $1 million, that becomes very stressful.
You pay
30
back
years
very
not
fast,
so bad.
but you pay a lot.
Correct. You'll be paying mostly principal, but that's one thing. So usually I tell my clients, try to avoid this, because what happens after this is that your demand pool shrinks. And from that, then maybe your price shrinks.
Correct.
So if you're here, then you can
And
consider.
just add in one more point, right, guys, is that once your property is very, very old, when you add up, if it doesn't hit 92 years, the property age and your age add up, not 92, do you know that actually your buyer can't fully utilize their CPF? Guys, how many of you all actually first time hearing this? Can you type in me in the chat? Right? So imagine if your buyer cannot fully utilize it for CPF, do you think they choose your house or they choose another house that they can fully utilize CPF? Right? So be very, very clear about it. Of course, it's not that they cannot use the CPF. They still can use, but it will be prorated. Yeah.
Depending on how old you are.
How old, yes, how old the property is, yes, correct.
So when you buy, this is a typical purchase. You look for us first. We do an assessment for you. Then you can go ahead and do the OTP, then do the exercise, pay the stamp duty, and then complete. And this is when 75% of the loan has been out. So I want to talk a little bit about what happened in the recent FOMC, why this is exciting for me, and what it means for all of us. Okay, I want to bring your attention right over to this a few numbers over here. Number one, right, you can see the December projection from 3.6, they actually increased to 3.9, which means they are slowing down the rate of decrease. The 2.9 is, give me a second. So the 2.9, right,
also slower
to 3.1. 2.5 also to 2.6. So this is when they are actually a little bit more conservative over here.
So they are tapping on the brakes slowly.
Correct. And just now you were talking about unemployment, right?
Yep.
This is the numbers that they are okay with.
Okay.
These are the numbers that they are okay with. 4.1, 4.0, somewhere around there. They want to be able to hover there. This is what they consider a restrictive stance. So there are a few key data points that we look at, which is the PCE inflation, the GDP growth rate, as well as the unemployment rate, to be able to determine what Jerome Powell will have. And this is the dot plot which Pete has just now covered in immense detail. Honestly, the later you send me the link for the Yahoo one. That one really important.
Oh,
What?
yeah, can,
Excited. Wow, add that to my arsenal. So over here, you can see that they actually want to be able to lengthen it lah. They want to slowly lower it. Otherwise, inflation may become prevalent. So we look at where Singapore interest rates are likely to go today. Okay, so Singapore is based by an exchange rate based policy, and then domestic interest rate typically follow US because we are small. So this is the whole document, but I'm going to save you some time. Look at the fourth portion over here. They basically say we are price takers. We cannot decide the price. We are too small. It's too expensive. All right.
Yeah. And
So
guys, the last statement that Ethan highlighted, domestic interest rate have typically been below the US interest rate. This one very important. Later we'll come back to that. Don't must remember this one. Yeah.
correct. So I believe in believing but verifying, which is why I pull out 4,000 over data set for ever since 2005 until today, 19 years, there was 94.21% correlation. I know inside my disclaimer, they say that past performances are not indicative of future results, but 94.21 is 94.21 lah, guys. So
It's not 100%. It's not 100%. Okay.
It's not 100%. It's not 100%. There are a lot of other things. We have more than one trading partners, but most of them denoted in US dollar and they trade in oil. They trade oil in US dollar. So that's the world reserve currency today. So what happened is I take the numbers that was given in the FOMC projections, right? Then after that, I plot it into the graph so that we'll be able to get a more visual and more accurate representation of this. So we look into the projections at this point of time. We can see that these are the numbers that we calculate. Okay, so we are able to calculate where SORA is likely to be. I discounted for correlation and I use the percentage to be able to find out where SORA is going to be, and these are the numbers.
Yep.
Okay, so that being said,
so in fact, when they say the effective rate slightly will be 2.6, then we can expect the Singapore rates to be like 1 point something.
1 point something.
Yeah.
At 2.9, we are at 2.08.
2 already, right? So if I minus another 0.3, then it's like 1.7.
Yeah, 1.9, 1.8.
1.9, 1.8, right? Hey, so guys, the thing is this.
Fluctuation 10%.
The thing is this. I know that the era of like zero interest rate is no longer with us. But guys, if you imagine if the SORA rate
will return.
The SORA rate if dropped to 1.7, 1.6, okay, I want you to think about the impact it will have on the stock market and the property market, because the narrative that a lot of people were thinking about previously is that, hey, interest rate go up, wow, property price should drop, stock market should drop. Then now that the rates are going back down, and it's going back down to such a level, what do you think is going to happen to the price? What do you think is going to happen to the price? All right, so think very carefully. For those of people who say, hey, Pete, now the stock market very high, property market very high, don't buy lah, wait lor. Then my answer to you is, you dare to wait. I don't dare to wait. Because I see the thing like that. I know I wait, I die. Right? So
yeah, 5.2 S&P.
Yeah. So for those people who left the S&P market, US market, now they're crying. Right? So, but it's still not too late. I can slowly come back. But it's very, psychologically, it's very, very hard. Once you sell already and now it go up by another 20%, then you're like, huh? How to buy back? That's where the problem is. Okay. Sorry. Ethan, continue.
Short put.
Yeah. Short put.
Not financial advice.
Yeah. So, hey, don't anyhow do. Okay.
Please don't do. Look for Pete. Honestly, last time I want to share a little bit. Last time I used to trade, and honestly, it takes up a lot of mental energy. Especially when your portfolio is below like 100K, below $50,000. Sometimes it makes more sense to outsource something like your investments to some professional like Pete, where he is married to the stock market. And
Hey,
then,
don't like that, eh?
you're
Later
married
my
to your
wife
wife.
come and look for me.
Later jialat. Okay, so he is very in touch with the stock market, and it takes a lot of mental capacity for you guys to be locked in and tuned in to that lah. So some of the clients that I have will be very happy to move over to Pete, so y'all can consider also.
Oh, hey, thank you, thank you, thank you. Hey, but tonight is for mortgage lah, for mortgage. thank you,
Hey,
thank you for your sharing. Thank you for your sharing.
no worries, no worries.
Yeah.
You take
Hey
care of
guys,
me.
this is
Tell
not an
you.
advertisement. This is not an advertisement because my fund is not always open one. So now we are in the close season. Okay, so when it's open, I let you all know. Okay.
All right. So next thing, right, I want to share. I'm coming towards the end already. We are talking about the on the ground, what's happening.
Yeah, then later we can talk about Q&A also. Yeah.
Later we can talk about Q&A and everything. So on the ground, right, on the floating rates, there has not been much changes. The fixed rate, right, they are starting to decline. Why they are starting to decline? Because you look at the effective federal funds rate, they are already declining already. And the
Yep.
banks are actually lending to you 2 years at a chunk. And
Mm.
then they want to be more competitive amongst their peers,
Yep.
which is why I exist to make more competition so that you guys get better rates. So this is when you'll be able to try to see whether what are the rates that are cheaper and then try to pay the lesser rate and then
For those people who are going for floating rate, right, Ethan, what is the current spread like?
0.5. I will get to it.
0.5. Okay, so it's about
Mm,
SORA plus 0.5. Okay, yeah. So this is useful.
mm,
Right. So guys,
correct.
for those of you who are looking at your current loan, just look at if you are going for floating, right?
Mm,
Is it higher or lower than 4.4? If your current rates is like
mm,
a SORA plus 8.8 or SORA plus
mm.
0.9 to even 1. I know last time got 1. So
The
then
one is there after law.
yeah, then you must really go and adjust because you look at it now, it's actually very doesn't even make sense for you to not adjust your portfolio. Yeah.
Correct. Can be the difference of thousands of dollars.
Mm.
So even right, you see, right, one thing I like about mortgage is that it's so dynamic that we are able to play with different rates and we can choose between the 3 months or the 1 month SORA rate. Okay, guys, I want to open a poll to everybody. Okay, when interest rates are dropping,
Oh.
do you go for the 3 months rate and or the 1 month rate if you got no choice but to take floating rates?
Oh, so you type in 3 or 1, okay? Everyone type in 3 or 1.
Everybody type in 3 or 1, then we'll see the response together.
For this is very applicable.
Mm.
For those of you who are buying new launches. Now, recently, Lentor mentioned, sold 75% like hotcakes. Okay. Now, for those of you who are going for new launches, I don't know whether you know or not, is that you cannot take fixed rate one. You can only take floating rate.
Correct.
Because
And
it's new launch. Okay. Because it's new launch.
correct. And the amount that you will get below every person that actually invests, right? That kind of difference will mean that you have a higher return on investment for the amount, right?
Yeah. Okay, so Ethan, what's the correct answer?
Wow, I see that your community very smart.
Yeah,
Everybody
they
pick
season
one.
one. They know one. They know
Wow.
one.
Solid lah, everybody.
Yeah.
Congratulations on getting it right. The reason why you want to use 1 rather than 3 is because the average is smaller. And when averages are smaller, when they are declining, they take in faster.
You want it to be updated more quickly, basically.
Correct.
Yeah.
Correct. So when interest rates are going up, then you go for 3%.
Yeah. Hey, guys, but take note, not every bank offer 1 month.
Correct.
Not every
Not
month.
every bank offer 1 month, but for me,
Correct.
it isn't a problem because I work with 10.
Yeah. I know some of the major ones don't offer even.
A lot of the major one don't offer
Don't
actually.
offer 1 month.
You
Actually.
try to look for 1 month rate in all the major bank. I don't think anyone give.
Yeah. Yeah,
It's
correct.
foreign bank. Yeah. Unless they give then to be more competitive.
I don't think they will give. You know why not? Because 99% of people who don't attend this session,
They don't understand.
they will just go to you. They will just go to the main tree, basically. Okay. They don't know that there got other things out there one. You know that you can actually borrow not from a bank, you can actually borrow from what we call a financial institute. It's a lending company, even. Right? And some people say, wow, Pete, I'm very scared. Then what if the company not good? I say, hey, you're the one borrowing money. You scared for what? You're not the one lending, you're the one borrowing the money. Okay?
Yeah.
So So those of you who need help, do go and look for Ethan. Ethan, I always get him to do all my loans because he's very good at all these hunting for gems, and he will go out of the norm to hunt for the gems. That's where he got me a very good deal. Later I tell you what was the deal, but but no more already, right, that deal.
They were jealous, make
No
them
already.
jealous. It's
Okay,
okay.
no, I don't want to make you all jealous. But okay, later I will still share. But the key thing is this: when you're going to refresh your loan or whatever, right, do it quickly because a lot of times, sometimes the bank will compete with each other. They will come up with fresh deals for like a short period. That's when Ethan that time alert me, hey, Pete, got this deal. Then have you quickly help me grab it, right? So when Ethan show you all the deal, also don't take too long to think. Okay, so that's why we created this live stream, and even when Ethan do consultation, right? It's just like investing. We want to help you all to prepare so that you got all your info ready. Then when the opportunity come, you should take action on, no need to think too hard. Right? Okay. Vani is asking, can we have Ethan's contact? Can. Hey, actually, I tell you what, don't directly message him, otherwise his phone will go bust. Okay. So
Yes, please.
yeah, I send the link for application, right? So this is a Google form. Later we can go through the form for those of you who don't know how to fill in the form. But basically, if you need to refinance your loan or you're getting a new loan, right, then you can apply in this link, right? Then you have any specific question because everybody got specific loan questions like your age, like income or whatever. Okay, right? You can check with Ethan. Ethan is very good at this.
All right. I want to add one thing before I go on to answer Mel's question of if just refinance, when's the next earliest time to remortgage? The one thing that I want to share, right, is that my team is not just me. If
Oh yes.
I have this other overly qualified individual who has a master's in real estate investing that is also a mortgage broker. He is overqualified because he has multiple properties, and this is one of the things that he like to do for fun.
Passion, passion.
Yeah, passion. And also we have a CFO, the ex-CFO that might be joining us soon. That one will give you more details on that. But at this, you are in good hands whenever you're with us. We are quite overqualified for our job, and that's why we enjoy it. But more importantly, right, to answer Mel's question, if just refinance, when is the earliest time to remortgage? This one, I'm going to go back a few slides to be able to go back to our.
This one, the 1 year conversion, is it?
No, I want to bring them over to the earlier slide, but this is a bit too early. But okay, never mind. We'll get there. So, for example, I wanted to show you guys this chart for BUC or resale. The thing is, right, when you refinance already, right, there will be this thing called, they will pay for your legal fees, they will pay for your valuation fees, but they want you to stay with them for 3 years.
That's right.
So when you just refinance, right, depends. So if you are smart and you got the 1 year free repricing package, then 1 year later you reprice to a 2 year package, then 3 years done. However, if you have a normal 2 year package, then what's going to happen is that you're going to do a repricing anyways, or you can call me and then we see if your bank gives you good rates or bad rates. If your bank gives you bad rates, then we're gonna have fun. And the thing is, typically it is very difficult for banks to be able to constantly give good rates. Because if they always are the cheapest, it's very bad for branding.
Very bad for their business also.
Very bad for business. There is no profit in being cheapest.
Yeah. And guys, for those of you who are thinking of like repricing, right? This one, Ethan was the one who told me, he's like, hey, you think the bank value existing customer more or value a new customer more? Right? Think about it. It's always going to be the new customer because it's a new money, right? So usually the good rates they will give to the new customer. The existing customer, they'll give you like a okay rate, the okay rate, right? So what?
Normal rate.
Normal rate. So what
rate.
I did back then is when I got my repricing rate, I basically compare with Ethan's rate outside, right? And I realized, wow, actually outside rate is better. So for those of you who already did your refinancing one time and you hit the exit point already, right? You can think about refinancing instead of continuing to reprice because you are likely to get a better deal, right? I use the word likely to get a better deal. Refinancing is because sometimes maybe they will give you a good deal for repricing, but seldom happen. And one more thing is, even if let's say you finish the first 2 years already, let's say yours is not the first year repricing, you're locked in for 2 years. Okay. After the 2 years, you want to refinance, but you say, hey, but Pete, Ethan say got the clawback for legal fee and whatever valuation, right? Okay. This is where you can sit down with Ethan to calculate whether worthy or not.
Yeah,
Whether
depends.
worthy or not. Because for my situation is that there is a clawback, I have to return the legal fee and the valuation fee, but it all adds up to be around 2,300, something like that. Around 2,300. But when I look at the difference in interest rate and how much more interest I'll pay in just 1 year, it's more than worth it. All right. So guys, when y'all do the consult with Ethan, sometimes when you're still locked into your third year, think about, is it worth it for me to break? If it's worth it, then break. The ultimate thing is whichever gives you the most unbeatable rates once again, right?
Correct. And sometimes the term very important because I am a little bit different from other brokers because I like to ask my clients when they are looking to sell.
Oh yeah, that's very important also. Yes.
Yeah, because if you're selling already, right, and then you're still within lock-in, that is a 1.5% penalty on the entirety of the loan. So if it's
that is more significant, yes.
Very significant. If your loan is $1 million, you are paying 1.5% of that. That is like $15,000.
Yeah.
Yeah. So if you spend $2,000 to save $15,000, will you do it?
Yeah.
Right. Okay. So the next thing is I'm going to go towards our fixed rate first to wrap the rates portion, and then to talk a little bit about what I feel. Okay. So number one, not financial advice, is my feeling only. Okay. So so for 2 years fixed rate, right? I believe, right, this is something that is very interesting for everybody to look at, because for $300,000 we are looking at 3.1, 3.2%, but they have the conversion after 24 months. $500,000 we are looking at 3% conversion after 24 months. $700,000 2.95% and conversion after 24 months. What is exciting for me is the $1 million at 2.9%. $1 million at 2.9% allows you to convert after 12 months.
Yep.
Which means allows you to refresh your package, which gives you an advantage on paying the lower package.
Yeah. So guys, for those of you who are just now, I think there was a question like, hey, if the rate keep dropping, maybe I wait for the rate to drop, then I just go for floating. But guys, actually right now the floating rate is 4.4, So how much do you think will drop? So actually you can go for your 1 year lock-in, see how much the rate drop. Then after 1 year, if it really drops way below your current fixed rate, then you refinance. Okay, but Ethan, this is first year refinance is only for
1 million up.
1 million and above. Yeah.
950 can try to appeal. But try only, no promises.
949 can.
949 for you, okay. I try.
Okay, but guys, the kind of good news and bad news is that property prices in Singapore now are quite high. So I think for many people, 1 mil is actually more than sufficient for them to qualify for it. Yeah. Okay.
So give me a moment. This is okay. So this is the one that we are looking at right now. Currently, we are looking at SORA at 3.68. We assume, right, that there has been a 0.5% in 0.5% buffer. So if we were to increase it, right, by 0.5%, right, we are looking at 4.18. And for next year, which is the end of December or this year, at the end of December 2024, we are expecting SORA to be about 3.21%. Keep in mind, this data have a plus minus 10% error buffer. So when you're looking at 3.21 plus 0.5, that is still 3.71.
Yeah, correct. So it's still way higher than the fixed rate, guys. Yeah.
It's still way higher than the fixed rate. So for me, right, if you are able to get the 1 year free repricing, that one is the best deal. If you cannot, the best. If cannot, right, we look at the 2 years. We look at the 2 years together, we see how it goes. We see 2 years later in December of 2025 over here. Let me draw.
Yep.
So if we look at December.
So for many people who are refinancing, recently we helped 2 of the clients. When people refinance, they don't really look at the clause too deeply, right? So they thought, 2 year lock-in is quite standard, right? Then we told them, hey, stop. If you 2 year lock-in, that means what? If the rate drop even further after second year, right? Within the second year, you cannot refinance. Yeah. Right. So guys, be very, very careful. Don't go and sign your refinancing so quickly or the new loan so quickly. For those of you who are refinancing new loan, please check with Ethan first. Very important. Of course, there are other things to be checked, but this is one of the most important. Imagine you're locked into that loan. for an extra year, when you see the effective rate keep dropping, you'll cry. Okay.
Correct. But to answer your question, should you wait until you
Mm.
reprice next time? So let's assume you wait until December of 2024, then you're going to do a repricing or refinancing.
Yep.
So during this period of time, how much you pay? SORA plus 1%. That is 4.6.
4.2.6, yeah. Mm.
Sorry, the thing don't look so nice. But 4.68. So during this period of time, you're paying 4.68 while everybody else is paying 3%.
Mm.
So in the future, yes, the rates are going to decrease.
Mm.
But at this point of time, you still need to be able to get yourself in good rates.
Mm.
So I
Okay.
think call us, we'll be able to give you the best form of advice we can possibly do and try to save you as much money as we can.
Yep. Okay. Oh, there's someone who DM me to ask for the link. Okay, wait, let me see the link. The link is here. Okay, so for those of you who want Ethan to take a look at your loan to make it better, optimize, make sure you pay lower mortgage, right? The link is over here, rebrand.ly/unbeatable loans. I put it in the chat here already. Okay.
Thank you very much.
All right.
All right.
Okay, Ethan, you got anything else you want to share with them regarding the mortgage situation in Singapore? Actually, when you talk to the banks people, is there a sensing that maybe the fixed rate is coming down?
Yes. The thing is, I get updated almost on a daily basis on when the interest rates change. So like once the rates change already, right, my banker will update me on the same day lah.
Yeah.
So when you see that there are banks that are fighting with each other, at first you don't see anything below 3.
Yeah,
Then
this 2.9 thing
suddenly
is quite new.
everybody come and give 2.9. Then
Yeah.
after the FOMC, people don't want to give 2.9. For example,
Cannot say
a
bank name,
red
right?
color bank remove their 2.9.
Red color, red color bank. Okay, guys, you all know
Ah,
what red color bank is? If you know, type in the chat, okay?
the red color bank. This bank got 2 color one lah, but I'm gonna shut up over there lah. The bank got 2 color. I cannot say which one, but the
Okay,
bank got 2
okay.
color. You know which one already now?
True.
Will not confirm nor deny that.
I realize a
Okay.
lot of the banks are red color. Now that I think about it, I was like, yeah, quite a lot of them.
The logo have to be eye-catching ma.
Yeah.
Yeah.
Red color.
Yeah, and blue also a lot. Yeah. So I think
Hey, Gary has a good question, Ethan. Gary is asking, will the usual banks send the customer the reminder that the lock-in period is due, or they will just let you move into the higher rates, the day after rates?
can I ask you, your bank got ask you, hey, your annual fee is reflected on your credit card statement. Can you please call in and waive it?
Guys, I can tell you, my experience is that my bankers never call me and say, hey Pete, if you don't refinance now, your rate will be higher. You should go and refinance to another bank. They never does that one. So guys, when you all do your loans, right? Okay, so what Ethan does is he also help you all to track. When it's coming to the due date, he'll remind you all. But you own self, guys, these are for God's sakes, also track it. Usually a good timeline is how many months, Ethan, to start looking at refinancing before the expiry, the lock-in?
4 months.
4 months. Okay, so guys, type in the
Okay.
chat. 4. Remind yourself, whatever is
Everybody
your
type
lock-in
inside
period.
the chat 4 to 6 months.
Yeah. If you are the more complicated type, then maybe go for 6 months. If it's like two-person name, for example, right? So if you look at your expiry of your lock-in, okay, count backwards. 4 months or even to 6 months. That's
Correct.
when you need to start initiating the process already. Right?
Because
so
it takes 2 months minimum.
Correct. So that is when I can help you to go and find the loans and everything. Then the law firm needs to go and talk to each other, and that will take some time also. Okay? All right.
Correct.
Very good. Okay. Ethan, if you have nothing else to share. Oh, do you finish your part? I can't remember actually.
I finished already. This is pretty much what I have to share. Everybody, any other questions that I have left on the table?
Yeah. Okay. Any questions you can put in the chat now. But let me just talk about my side a little bit. I just want to share one more slide, and then we really go into Q&A and also looking at the stock market. Okay. And this is the most important part. For those of you who stay with me, now this is the 精华. Okay, this is the best one. Okay. I like to reward people who are loyal to me. Very good. Okay. right? I'm a sucker for loyalty. I don't know. I don't know. These days, very hard to find loyal people, but
It is.
that's why to be honest, I have so many mortgage brokers that contact me. But I can tell you, a lot of them are the values don't align, the passion don't align, even their integrity don't align. So it took me a while to find Ethan before I bring him on. Okay, so I hope you all really appreciate this. So for those who need help, all right, you all can get Ethan to assist you. Okay, now I share with you my views on the interest rate. Well, one thing is this. Number one is this. I actually hope the Federal Reserve don't cut 3 times. I hope they cut 2 only. Okay, I hope they cut 2. I know some of you all who buy houses please don't kill me. Please don't kill me. The reason is what? The reason is because now, guys, the market now is still pretty hot. Regardless, is it stock market or property market? In fact, in US, home prices has been rising, if you don't know. Okay, so what does that mean? That means if Federal Reserve really cut like 3 consecutive times, let's say September, October, December, like that cut. If they cut too fast, too much, it might lead to a bubble, which we are just pushing the can down the road, which is quite scary. Okay, right? And some more this year is election year, no, guys. Right now, it's pretty certain already. It's once again going to be a Biden versus Trump election. Okay, who win? I don't know. But one thing I know is that the Federal Reserve also don't want to create a recession, right? By holding the rates high, which is the current level, for too long. So actually, I don't envy the position of Jerome Powell. They are sandwiched between stone and a hard place, They cut, they risk bubble. They don't cut, later recession, then the president will kill him. So he's very hard. Okay, so I give you my prediction before I go into charts for stock market. Okay, and I'll talk about real estate also. Stock market, I think it will be choppy. But it will be choppy but gradually up. Okay, so I don't know whether this is a good illustration, but choppy and up. So guys, so when it's choppy and up, what must you do? For me, I'm not telling you what to do. I'm telling you what I will do. When it comes down to support level, later I'll show you some support level, I will start to enter gradually, right? Once again, for those of you who waited on the sidelines for so long, if you still want to wait, I don't know whether that's a good idea. Okay, right? For those of you who are willing to listen, I'm here to help you. Okay, now for mortgage, the current fixed rate, once again, it really makes more sense. So for those of you who are on floating, right, if you are betting on rates dropping fast enough, okay, now not just hearing from me, you hear from the expert, Ethan also tells you that it doesn't make sense, right? You need the rates to come down by about 2.5% in order for the floating to catch up with the fixed rate. So it's going to be quite tough. Okay, so right now, like what Ethan said, if you are able to borrow for more than 1 million, he can help you get the fixed rate 2.9. 2.9, right? Is it 2.9?
2.9.
2.9. And after 1 year, you can choose to change it to the floating rate. Should the floating rate be better? Right? If not, you just 2.9 2 years. That's so possible. Okay. But home prices, this is really the important part. I think home prices this year, okay, how will I draw the graph? It's like this. This is January. Okay. The home prices now is somewhere here. I think we will sort of slow down a little bit. Why? Because the last few years, I don't know whether you all noticed, we saw a lot of TOP, a lot of new condo unit coming online. So we need a while to digest all these new units. So I think the prices will hold stable for maybe the next 2 quarters around there before they digest all these new units. Then I expect the prices to increase. Why? Because for those of you who follow me on YouTube, you will know that I always talk about supply shortage coming up in 2025, 2026, 2027. Okay? So with the lower supply, I am expecting the prices to creep up quite aggressively. Once the supply is gone, plus what is happening, just now Ethan already showed you already. What is happening in 2025, 2026? The rates is going to go down, So that is when the property price, so that's 2026 over here, is really going to start to run. Right? In fact, no, I don't think 2026, end of 2025, you start to run. By 2025, you start to run. Right? So for those of you who are looking at changing your property, maybe you are buying a bigger place or upgrading to a condo or whatever not, my personal take is if I'm in your position, I will take action in the next 3 quarters or 2 quarters to take advantage of the price movement that is sideways. Very, very important. Okay? Sideways, very, very important. Once the sideways movement finish, Imagine you are upgrading. You have a 1.5 million property. You want to upgrade to 2 million. Actually, you don't want the property market to go up when you're buying, right? A 10% increase is much bigger than at the 2 million mark than the 1.5. So be very, very certain. If you want to make a move soon. And right now, I don't know where you all noticed. I think Ethan also noticed this. Rent has been dropping.
Yes.
Rent has been dropping, guys.
Hallelujah.
I also hallelujah one side and not hallelujah the other side. But so rent is always a precursor to prices. That's why I say the next 2 quarters we will see sideways choppy market for prices. Because rent is going to start coming down. Why? Once again, because of the huge supply this year and last year in 2023. Okay? All right. Okay, guys. Any questions? If not, I just go to the last part. As I promised you, I will talk about the charts. Okay, let me go to the charts first. Hey, how many of you here are stock market investor on top of property? I know this one is not property, right? Right? If you're a stock market investor, can you type in S? Type in S in the chat. Okay. Okay. Wow, so many. Hey, I think most of you come here see stock market one, right? Not see property one. Hey, but guys, I can tell you, property and stock market to me is a perfect mix. Why? Because one is a super long-term asset that I need to stay in and buy anyway. And I can take leverage very safely. Right? Hey, you try to go stock market, you take leverage, you think you'll pay 2%, 2.9%. No, the current borrowing rate is like 6%. Right? But stock market, what's the good thing? The good thing is that it is a bit more volatile. Right? More short-term, but more volatile. So it's a bit more liquid. So it fulfills the short-term requirement, whereas the property fulfills the longer-term requirement. Okay, that's how I play my stock market game and my property game. But of course, at the same time, the stock market game, I also do options. Okay, hey, how many of you here are not familiar with options? Or you don't know what the heck I'm saying? Like, what options? Is it property option? Can you type in me in the chat? Okay, I won't go through options tonight, but maybe in the next few live stream, I'll do that. But the important thing is this: if you don't know what to do, please don't anyhow do options. It can be quite dangerous also. Okay, all right, okay. First thing, I don't want to show your US yet, no. I want to show your this country. What is this country? The Nikkei 225. What is this? This is Japan. Now, a lot of people always say, Japan, lost decade. Don't know what. Okay, right. Let's take a look. Let's take a look. I go and add S&P beside it. Okay. Do you know that last 1 year, if you invest in Japan, right, you outperform US? You know that? A lot of people always say, Japan cannot buy one, cannot buy one. Okay, so once again, before you make a decision on all these things, watch very carefully. And you know, when did I start looking at Japan? I can tell you, it's not my own credit. I seldom look at Japan one. It's because of the old man. Who's the old man? Warren Buffett. That time Warren Buffett buy Japan, you all remember when Warren Buffett buy Japan? Right? They bought into the Japanese firm. You remember? They bought into the 3 firms. And after he go and buy Japan.
They use leverage, right?
Yeah. Right? They use loans, but basically. Right? So Warren Buffett bought into, where is it? Let me see. Does it say over here? Basically all the big companies, all the Sumitomo, all these, right? And people were like puzzled, like, what was he doing? Why did Warren Buffett buy all these things? Okay, and I guess now we know why, because back then Japan was so cheap. Right? So once again, guys, never kick away any good ideas. Right? Especially when the Mr. Buffett do something, think about it very carefully first. Hey, what does he do? So I was quite fortunate. Last year, April, I still remember. I was also in Japan that time. Right? He went into all these big 5. By the way, I show you all the big 5. You all can go and see. They're all by numbers, and they're all 8 something. So it's 8001, this Itochu, Marubeni, Mitsui, Mitsubishi, different company. Mitsui and Mitsubishi different. Okay, and lastly, Sumitomo. Right? So these are the 5 companies if you want to know. Now, let me go into S&P first. S&P 500. Okay, you can see I draw a lot because when I do consultation with clients, I always draw. Right? So you all can see S&P 500 has been going up anyway. Right? But But what we see now is that all these are support levels. Right? So what I just want to tell you all is that whenever I see short-term support level at all these small one, can you all see? Hey, you all can see not? Can see, type in yes.
Yes.
Right? All these small level here, I will start to enter. I will do mostly options, but for those of you who don't know what the heck is options, never mind. Just buy shares. Right? That's what I personally do. Okay? All right. And if you look at, let's say, NASDAQ, right? Also very similar one, but with a slight difference. The difference is that NASDAQ, if you look at the support, is a bit more erratic. Sometimes 20, sometimes below. So this one is a bit harder to catch. But overall, I think the whole market is still strong, is still decent. Why? Because even when you zoom out, okay, you go to SPY, when you zoom out, you go to weekly charts. All right, hey guys, can you all see? We are just coming out of a very long term like that. So for a lot of people who say, hey, I think the market is going to crash, it's going to crash. Then my response is, you mean the recovery is only from here to here, right? Which is like what, 15%. But historically, when you look at the stock market, right, guys, can you tell me now? Can you all see just on this time frame, not very long, 2016 to 2022, every time when we have a significant decent drop, there is a much longer extension of recovery. When there's a very significant drop, much longer extension. Significant drop, this is COVID, much more meaningful recovery. All right? So this is one of the macro thing I want to tell you. And right now, we are possibly going back to the tail end of the interest rate, the very, very low interest rate coming in the next 2 years. I'm not someone here to always predict the macros, but I'm just saying, if the interest rate is low, people are borrowing, businesses are booming, there is very little reason for this to go down. More likely, it will go up, but maybe not at this level, not like that. Too steep, right? But perhaps level off. Okay? But guys, as is creeping upward doesn't mean it's a straight line. There will always be downward draft. But this is the price we pay for investing. But at the same time, guys, think about it. If there's no downward draft, how are you going to invest? Imagine the stock market go like that. When to invest? You also don't dare to buy, right? It's all this downward draft that allows you to come in and grab. Okay? All right. Okay, so guys, that's all I wanted to share about the stock market. And today we have a very extensive session talking about the property market as well. So guys, for those of you, once again, who need Ethan to help you to look at your mortgage, all right, once again, I put the link in the chat again, right? Okay.
Thank you, Pete.
Killian is asking, is the session recorded? Yes, but let me go back, ask my assistant to edit a bit because there's some part that I don't think can put on YouTube. Okay, so all right. So always those of you who come and watch this live, you will get the full thing. Okay. I wanted to say I got what rate, right? Actually, I also got a very similar rate as your, which is 2.9 and 12 months I can reprice. Yeah. Right. So y'all can go for that one. Okay. Gary is asking which broker.
You want to talk about your login?
What's wrong with my login? I can't remember.
I don't know, like 1 year only.
Oh yeah, it's a 1 year login also. Yeah, 1 year login. Yeah.
Well, opportunity must grab, okay, guys.
Yeah, 1 year, 1 year. Yeah. Gary's asking which share broker has the cheapest fee for stock and options. Okay, I personally use Interactive Broker, but Webull and Mumu is also not bad. The rates are not bad. It's just that Interactive Broker has much better function for options. That's why I use that one. Right? But for interface wise, I do think that Webull and Mumu is easier to use. To be very, very honest. Okay. All right. If not, that's all we have for you all this session. Once again, those of you who need Ethan's help, you all can go to the link here. All right. Unbeatable Loans, and Ethan will schedule a session with you. But guys, do be patient. If you submit the thing and Ethan didn't get back to you because there's a lot of application, right? We always have a lot of application. So do be patient. If after a few days still don't have, just resubmit again. Don't need to worry. All right. Ethan promised me that for my community, he will take care of you all nicely. All right. Just that he needs some time. He needs some time. Okay.
It's me plus I got backup right hand man.
Yeah, now that he recruited a few more people, right? The capacity is bigger also.
Yeah, everybody's good. Everybody's good.
Yeah.
Everyone's qualified my team.
Yeah. Okay. All right, guys. So that's all we have. Any questions? Maybe when I put this on YouTube, you all can put the questions in the YouTube comments. All right. And for those of you watching on YouTube, do like and subscribe my YouTube channel, and we'll see you all next time. Bye-bye.
Thank you all for coming. See you all. Bye bye.
Bye.